Welcome to this Markets.com company profile of Valero Energy Corporation. I am your host, Luisana Swegard. Thank you for joining us. Let's get started with some background information. Valero's headquarters are located in San Antonio, Texas. More than 21,000 employees work for Valero, which has a market cap of $17 billion. Valero operates exclusively in the U.S. in the areas of refining and retailing. The company is run by CEO William Cleese, CFO Michael Siskowski, and COO Richard Marco Gleese. Moving on to the market, Valero is traded on the S&P 500. Let's take a look at Valero's financial figures for 2007, in which reported revenues for the company were over $95 billion, with net earnings over $5 billion. Taking a look at the balance sheet, total assets were over $42 billion, and total liabilities were over $24 billion, with shareholders' equity at $18.5 billion. On December 31, 2007, Valero stock closed at $70.03. As of September 5, 2008, the stock was priced at $32.58. In 2007, over $271 million in dividends was paid out to shareholders. Valero offers products in transportation fuel, asphalt, petrochemicals, and lubricants, with ExxonMobil, Chevron, ConocoPhillips, BP, and Shell as its largest competitors. Valero's vision for growth is based on improving the refineries they already own in order to improve margins and revenues. For the last decade, Valero has grown through acquisitions to become the largest refiner in the United States. Now it is interested in improving those refineries. Their main goal in improving those refineries is to produce higher margin products like ultralight sulfur diesel from lower cost feedstock, heavy crude. They are also entering into a phase where they can give back to investors in the form of dividends and stock buyback. Valero has done very well with oil prices going higher and higher up until the end of last year. However, they don't produce oil. They produce gasoline, so the price of oil is actually an input cost for them. Their margins and revenue growth is based on the demand for gasoline, and since a new refinery has not been built in America since 1976, the supply of gasoline can become constrained at times. The fact that Valero is very well suited to refine heavy crude, which trades at a discount to light sweet crude, means that their margins are better than those of other refiners. Oil prices did not matter to Valero as long as the demand for gasoline kept growing, but as you know, when prices at the tank surpassed $4, the demand dropped sharply, allowing there to be excess gasoline and lower margins for the refiners. This means that Valero will be in a great position to improve as soon as gasoline demand picks up again. And that brings us to the end of this Markets.com company profile of Valero Energy Corporation. I'm your host, Luisana Swegard. Thank you for joining us.